Welcome back, listeners. My name is Larry Kalvig, founder and CEO of the Haven Financial Group. And if you're just tuning in, you're listening to the Haven Financial Group radio show, where weekly we discuss crucial retirement topics, financial topics that can make the difference between surviving retirement and thriving through it. And if you're looking for more information about key retirement topics, whether the topics we're talking about today or in previous weeks or future topics, that can really transform your financial retirement future or picture, give us a call at 612-504-8400 or havenfinancialgroup.com. Set up a time to come in. There is no cost. We always joke, we love, we're coffee snobs. We make fresh cookies. And if it's nothing more than a conversation, an enjoyable one, we like to have fun with these difficult retirement topics. If it's nothing more than affirmation or confirmation, you have nothing to lose. And I encourage you, come on in.
Mm-hmm. You know, Larry, there's not much in the world that any of us can say we are absolutely sure will happen, except this. I feel very confident. Life will happen and unexpected things will come up in everyone's life. Whether the refrigerator goes out, the roof is bad, there's a medical emergency, maybe there's, some problem with the car. I mean, you name it, something is going to happen in your life as you progress.
I couldn't agree with you more. Life's calendar doesn't always cooperate with our calendar. Oftentimes it doesn't at all. And there's always, as you said, going to be unexpected expenses, whether health-wise, a new driveway, siding, and the list goes on and on and on and on. And it's why it's so important to have a healthy emergency fund. And we've talked about this over the years, a healthy emergency fund, where you have liquidity, you have quick access to money when you need it. But then when you use it for these events, because they're going to happen, how do you replenish it? Mm-hmm. And I think I'd like to start with, what is a good benchmark for a healthy emergency fund? And this isn't only a benchmark, so if you're listening, don't go, oh my goodness, we're in trouble. That's not the purpose of this conversation. We like to see, for a retired middle 60s, let's say middle 60s couple, a benchmark of having 50 to 100 grand liquid. Now that may vary where you're in the country, but a good 50 to 100 grand liquid, meaning easy access, whether it's checking, savings, money markets, CDs, high yield savings, where you're getting at least some interest, but it's liquid. Okay, that's where it starts. And I can tell you, most don't have that. Many don't have 10,000 liquid, and they have everything at risk in the stock market, and they think that's a good recipe to go into retirement, which I can tell you, and you probably know the answer, it is not a good recipe. So having a good emergency fund, so very, very important. It's where you need to start.
All right. So let's talk about, maybe you've had to get into that emergency fund. You've got $75,000 and you had to use $25,000 or $30,000 of it for whatever reason. How do you replenish that money?
Yeah, and we do a lot of this, just like the couple I said that had 2 weddings in 6 months. Right. This is big. Sometimes, you may be able to adjust your investments or the savings to get you a little bit more yield. But I say that with caution, because oftentimes that requires taking more investment risk, which may not be the right decision depending upon the timing, where you're at in life, and of course the tools and the vehicles and the type of monies you're dealing with. So make sure you're discussing this with whomever you're working with, that's helping you, you're partnering with, weighing the good, the bad. But that is one way it can be done. Other ways, which some people don't think of, probably the more popular ones I see, is using unexpected windfalls, such as tax refunds. Now, we do a lot with taxes. I also want to comment on this. A lot of people, they use this as a discipline. They have a lot of taxes withheld, and they get a big tax refund. Mm-hmm. And for some, that's the discipline they need to use. However, I would say for many, that isn't a good thing, because you're giving money to the government to use throughout the whole course of the year where you could be using it. However, some don't have that discipline, so it's not a good decision. So be careful with that, but using tax refunds. Inheritances are quite common. We see them very frequently where utilizing an inheritance. Thank you very much, mom and dad or grandma and grandpa or whoever passed it on to you. But using that to pad your savings or checking. Again, having that tax discussion, because what type of money is it? Lance, our CPA, and Melissa here at Haven Financial Group, we do lots of tax planning, lots of tax discussions, many meetings a week. I bring Lance in just to have a discussion, whether they're tax clients or not. We don't charge extra for tax planning. Mm-hmm. We do charge for tax prep, but taxes are very, very relevant. So using maybe inheritances, bonuses, again, tax discussion, because how is that going to be taxed? But using a bonus to replenish that emergency fund. So again, work with do you have a good question? Do you have a good tax person? Do you like them? Do you get together with them, or do you not even see them anymore, which is 90% of the time what I hear. We don't even see our tax person. We are a drop-off, pickup, and that's all we do. We couldn't be, and Lance couldn't be further from that. He wants a dialogue and discussion throughout the year, and he prides himself on his whiteboard and explaining things. Not that you have to be the tax expert, but again, most of us worked very hard for every dollar we have. Why not talk through where you draw from in the most tax efficient way possible? And by the way, fourth quarter, believe it or not, is right around the corner, which is where we discuss Roth conversions. Does it make sense? Does it not make sense? Maybe an IRA distribution, filling that 12% tax bracket up. If you're not having those discussions, now we're having those discussions with everybody, small, medium, or large, because it's a window of opportunity based on low tax brackets that will be here for another at least 3 years. Take advantage of it. Take advantage of it now, because unforced errors, people are going to look back and they're going to go, why did we not convert more to a Roth? Sure. Yet many are not having that discussion.
Absolutely. And I think this is a really interesting concept. If you're trying to replenish that emergency fund, why not try to cut some of your expenses, like service providers, like utility companies and insurance, and just those reoccurring expenses that really add up over the course of the year. I know that you can really negotiate with some of these people, can't you, Larry?
You can. I mean, I've heard a lot of success in this. You know, my wife and I, when family, we shop out insurances. I say shop it out. Why not? Yeah. You know, cell phone companies, they always take care of the new customers, but the ones that have been there for 25 years, not so much. So you mentioned utilities, insurance, cell phone, those recurring expenses that can really build up. And, you know, others just worth mentioning, because we do see them, maybe part-time work or freelancing. I see a lot of consulting. They retire and somebody wants to consult for some decent money, selling unneeded assets. I see it done. Hopefully it's because you're doing it because you're trying to simplify life, and it's not because you need the money. But seek financial advice in these areas to make sure you're making the right decisions pertinent to your situation. But a takeaway from this segment of the show is make sure you have an emergency fund. Try to get within the benchmark, have a clear plan to replenish it in the right way when you need to. And if this is something that listeners are struggling with and they don't know, that may be worth just a simple dialing 612-504-8400, havenfinancialgroup.com. Set up a time, because this is extremely important.
You bet, because as we said at the beginning of this segment, life happens even when you're in retirement. All right, when we come back, and don't make these mistakes. We're going to share them with you after you retire. You want to stay retired, and these are some of the things you want to avoid. You're listening to the Haven Financial Group radio show.